Hey everybody, welcome back to ThinkScript Trading. My name is Mike Fairborn. It's good to be back with you all here today. Joining the chat by a good friend and colleague of mine, Kevin Horner. You'll see him in the chat as KH. Folks, any questions, comments you have, throw those into the chat so we can help address those for you. But it's great to have you here. Hello to you, Virgil, Paul, Jenny, Michelle. Great to have you both on board. All of you, it is nice to see you. Michael, Rocky, Chris B, and many others. Some new names. Let's see, we got Mason. Welcome, Mason. Well as Rocky and Cecil. Folks, looking forward to our discussion today and really taking a look at trying to create maybe some creative approaches to visually see the impact of, let's say, for example, a Cahold. When we get a close above the high of the low day, as we're talking about a trend here, a trend breaking above a stock chart, pullback, a bull flag pattern with a Cahold. What do we see after that? Are we getting a moving average that might match pretty well with that Cahold? And how does that look visually? So we can kind of have a way to test, not just through a scan, but visually on the chart as well, how well a given chart has done with, let's say, closing above the high of the low day, a Cahold, with different sorts of moving averages. So really trying to utilize some of these tools on ThinkScript, right? And these technical indicators that we can visually look back on the chart and say, yes, with this particular Cahold on a bull flag or whatever the case might be, we can look back and have a little bit of versatility to change those numbers and say, well, how is this moving post this moving average or whatever the case might be? So trying to be a little bit more creative here with some things. Also wanted to tie in the VWAP into that, but some further discussions on that for sure should be interesting. All right, but I've got that all set up and I'm looking forward to diving into that. But first, before we do so, let's hit some disclosures to get rolling here. Information here is for general information purposes only, should not be considered an individualized recommendation or personalized investment advice. Now, we just mentioned the paper money software application, it too, for education purposes only. Now, backtesting results, because we are going to be doing some visual backtesting here, right? As we're looking and utilizing some of these tools to kind of help us see how a particular trend might have run in the past, sort of the structure of any given trend of a stock. But backtesting results presented are hypothetical. There's no guarantee that the same strategy implemented today would produce similar results because things always change when you're dealing with new information coming into the market, right? So we know that. In addition, wanted to state that investing involves risk, including for some products more than your initial investment. Past performance, no security, no of any security strategy, no guarantee of future results of success. And futures and futures options trading, as it states here, does not, excuse me, involve substantial risk and is not suitable for all investors. Now, we just look at the futures charts here. And so I wanted to bring that point up to kind of highlight this. But there we go. So we should be set and ready to go on that. And so, just a quick note, what we do oftentimes look at in this class are the following. Does the ThinkScript itself, we identify a goal today? That goal, let me just pull up my chart indications because I've got to highlight this here for you too. But what does that look like in terms of the trend? It's very, very important as we track a trend to kind of get insight as to, how is it moving across a different range, whether it be a swing trade, a longer term trade. What is going on in here and how can we utilize the tools, specifically price data, closing above the high of the low day, a moving average associated with that, giving us an idea of how we might be able to manage a trend and how stocks are actually, how a given stock is moving after it starts a Cahold. Does it tend to have a good success rate that we can visually see or not? Anyways, that's what I was looking at today, but I'm using a couple of already sort of pre-built indications, combining them together to build something kind of unique and different, just to try to find tendencies of a chart as well. But we're going to be able to scan for those as well today. So I've got the scan in here. We do share that ThinkScript at the end. Again, ThinkScripts aren't guaranteed for timeliness or accuracy, but as long as the data into the platform, that we have good data that is flowing through the platform, as long as that data is good, it's just kind of a mathematical calculation for these ThinkScripts. So with that, let's go ahead and just get our visual up here. And you can still see that I've got just kind of parking this in the back of our mind in terms of where we might stand right now with the S&P 500 we did come up and we did just break above the upper end of that triangle pattern right there, right? And a lot of times, hey, if the trend is up, what direction might we break? Oftentimes in the direction of the trend. And that's just a great way to look at any price pattern as we're focusing in on the price patterns. Where are we at in relationship to that trend in the setup? And I've just put in here just the first extension of the triangle pattern. It is interesting, as I brought this up yesterday in that price patterns class, folks, as we get into this mid-range here, some of you may be familiar with that. This is referred to, mid-July. So mid-July to actually kind of mid-August. So I'll just put mid in here, not just July. It's basically mid-July to mid-August as well. August, that's what they refer to oftentimes as the summer rally, and we might see some strength over that time frame. It is interesting, I have to say, that we are getting this kind of longer term bull flag, but within that bull flag, definitely what appears to be a triangle pattern. You got the classic Elliott wave, 5-wave move in terms of defining triangles. 1, 2, 3. Notice we're getting tighter and tighter here. 4 and 5 before we're breaking out as we enter here the summer rally phase. And what we just mean by the summer rally is a movement. And you know what? Let me do this because we've got other tools too. You guys, if you ever want to just check and see where we might be at relative to a given time frame, come up top under your style, go down under standard and just hit seasonality. This gives us here well, in this case, it's a 5-year chart. We can always adjust this. This is a 10-year. And yeah, when I do that, I do have to adjust the pricing. So just a second here. I've got to put everything relative because prices 10 years ago are a lot lower than they are today. So I have to put everything as a percentage to kind of equalize it. There we go. All right. And there we have it. Now, you can see over here, these are our lines on the S&P 500, but this red line, if you haven't seen this before, it's referred to as a seasonality chart. You all have access to it, which is awesome. And you have access to it on any chart. But this is kind of the natural ebbs and flows of the market from a January, right? February all the way to the end of December here. Key point you're looking at here is what are we seeing on the chart relative to the performance at the given time of the year, right? You can see some of the bigger moves. Okay, and this is really kind of the summer rally right through here to maybe that mid-August timeframe. First week or so, maybe week and a half, 2 weeks into August. That's the rally point we're kind of referring to right there. So I'm sorry, it's not exactly mid-August. It is kind of like really sort of the 1st of August. What I meant to say, I guess, is we kind of pull back from mid-June into July right here, and then we begin to go up higher. So that is interesting too, but park that in your mind because any ThinkScript you're looking at, we've discussed a lot of ThinkScripts, maybe focus based on seasonality on the bullish ones. Okay, focus on those perhaps because here's that triangle. And where are we at in the midst of? Right here. Now, over a 10-year, we actually ran to maybe even the end of August. So I've seen like right, and you'll see this spike here. So there's a mid-August spike, July, mid-August to the end of August right there. So kind of a bullish time frame. We'll have to see what happens. And then you get the classic September or October pullback before you get the year-end rally, also known as the Santa Claus rally. So a lot going on there, but I wanted to highlight this so we kind of have a sense that we'll be looking at a bullish trading system today as well, just the general format, okay? All right, so let's do this. I'm going to jump back now so I can get rid of, instead of just going back to my regular time frame, I'm going to do this so that I can get rid of that adjustment that I made over here. Notice everything's a percent. Anytime you want to totally dump all that and get back to where you were, just go to whatever your standard setup is. That's my daily 35-minute right there. And it'll eventually go. There we go. Now, notice now we're right back to our price. So instead of having to go back and adjust the chart, just click on your grids, your saved grids, just a good, solid, quick way to get into where you need to be. All right. By the way, quick note while we're at it, NDX super fast. Notice there is still a little bit of a triangle here. It's a little bit more complex. 1, 2, 3, 4, 5. Now, can we break across the top of that downward sloping trend line right there? That's the question. By the way, Elliott wave is not 1, 2, 3, 4, 5. It's A, B, C, D, E. A little side note there, but it is still a 5-wave move. But it is interesting here. We've held up a lot of our gains. And by the way, another thing that's been helping this, crude oil. Sorry, I had to go through a few different things. Crude's been down quite a bit. Notice this triangle pattern here. And yes, others pointed this out. Look at that. Oof, touch right off it right there too. There's the break. You take the biggest move of that triangle right there and you add it to the trend line break right there. And you know where it puts you? All the way down to about 60. In other words, this price of the largest leg of the triangle, 1, 2, 3, 4, 5 break, retest and fall, right there, we take this price and add it to the break and it says 60. It was fascinating to see it fall almost. I mean, when we went down here, that was actually pre-Iraq kind of scenario, which is amazing. But here we are again, a little bit of a spike over recent days. We'll see if we go down, but that can be a really big driver too, lower energy prices for the market in general to go. All right. Now, I had built a script, and you guys may or may have not seen this in the swing trade class, but I wanted to share it here. And by the way, it was an obvious improvement that could have been made, and so I did put it in between Tuesday and Thursday. It's more effective than what it had previously been. In fact, I'll show it to you right here. This is what it is. In fact, I'll highlight it and then we'll visually look at the chart because I built up the chart script to help us along the way as well. But what this is it's basically just using that old kind of a bull flag scenario setup that Ken had built from years ago. It's kind of an analog format because it's really sort of effective in showing what we're after. What I'm looking at here is a maximum pullback of 10 bars, but price is going to be above whatever moving average we want to put in. So we've got a trend indication built into this, right? I'll show you the obvious improvement here in just a second, but the trend is up. Okay. But in this case, we are trading above the 30-day, whatever we want to put in here. I used kind of one between the 20 and the 50, maybe a month and a half, which is 30 market days. But, you are above that level, above the 30 when you're getting this pullback, and that pullback can be up to 10 bars. Now, this here, you can alter it and drop it down if you want to, but you can't expand it out because it's sort of an analog script. It's already built in. I can't make it more, but I can make it less. And I could do, say, for example, 1 to, just as an example, 1 to 7. But that's kind of a decent pullback amount. I kind of put a larger number in here, but that's like up to 10 days. It could be less, but that would be the max, right? We could set a different max, but it could be, it'd be like 1 to up to 7 if we did it that way. In other words, there could be a 10-period pullback before, in fact, we get the hold, but it's got to be above that moving average. Now, the last thing I did is which I didn't do on Tuesday, as I said, there's a look back period. In other words, you guys know the hold. I'll go through it on the chart too, just so we're on the same page. But on a lot of these pullbacks, you never make a close above the high to low day. And oftentimes when you do, so when we get a new candle, I'll put it in a different color here, like it's a candlestick here, it closes above the high of whatever low bar we've got. Whatever the high of that low bar was, that would be our hold. But instead of just giving me the signal on the day, give me 5 days over here. So still noted on the scan if it's within a 5-day range. Why is that so important? Let me go to a chart. Any chart would do just fine, just to highlight this right now before we run it, because I want to make sure we're on the same page here. But let's just say we do something like, gosh, Micron's been up so much, but Let's just say, for example, we're looking at a Micron over here. This was, this is an interesting one. We were above the, like right over here in this pullback. We were above the 30-day moving average here, which was about down here. Now, notice this low day, low day, low day, low day, all within 10 days, within 10 bars. The very next bar right here, it's a funny looking candle, right? But it's a close above the high, the low day. And when you get that, which we didn't get all through here, we begin to spike up. And that's oftentimes the beginning of the move right there. Okay. So that's what we're looking at here. The one thing is it does have a 5-day look back period, the one I've got, which is really, really helpful, or whatever number we want. I have it built in. So we can come back here and say, well, where was it? It was right there. We would still get that signal over here. And I'll tell you why this is so important. Because a lot of times these runs that come down here, and let's just say we're looking at a flag pattern and we get a close above the high to low day. It's just barely, barely starting to run. Just right here. A lot of times it'll go like this and come back down and then take off. This right here is your 5-day window. Because if we're only running this on a 1 day only, we won't see it. Now, if we're running this, we will still see it. But I'm just saying, if you run the script every day, or the scan every day, the scan script, you'll be able to pick up on this. But if you do it every couple of days, 2 or 3 days, you might want to have at least a 3-day look back to see what's been happening over the last 1, 2, 3 bars. Okay? Because we're just trying to capture the potential for that. Another one right here. Lower, lower, lower. We're above the 30-day moving average. This was a move to the upside. Did we close above it? No, we did not. That's a new low. Did we close above it here? No, we closed above it right there. And notice when we close above it on a lot of stocks, not every stock, it began to run. So this scan will try to find companies that have a tendency to run. That's what we're looking for here today. Yeah, Jim, for a pullback retest. Exactly. It's the retest. That's the one. Good focus. Yeah. Run it as a fib. That could be an interesting point to look at a fib there, Paul. There are ways, in fact, that'd be a cool thing that we could focus in on. It's an interesting topic request because there are fibs that we could throw out measuring between lows and highs. Let me show you how this works, and I'm going to go ahead and share it with everybody too. But it's built to scan in the S&P 500. It's the exact same one I built in that Tuesday class, but without the look back, which is critical. So here you go. We'll run this. You got 31 stocks out of 500 that come up over the last 5 bars. Now, I'm going to do this. I'm just going to narrow it down a little bit. And I'm going to do one other thing that I needed to note here, and that's this. Let's do this. I'm going to go in. Let's just change this look back period to a 3-day. That's a lot of stocks to look at, but we have had a bounce in the market. So that would account for so many still coming up. Now, the one thing that I did put in here, I'm going to highlight this for you when you see it. Let's see. Why is that one taking longer? Actually, it's looking back over a shorter period of time. I should have saved it. Anyways, dang it. It didn't like me running it right after, I guess, so fast. Ow. The one thing I wanted to note is that I had something similar to this last week, or excuse me, on Tuesday. But I wanted to make sure that the price of the stock is still holding above the hold. On Tuesday, we had a number of them that went down. And that's a key point. Now look at this darn thing. My computer was acting a little bit slow, but this is a little different. I should have kept the 31 days. Dang it. I'm going to go back to the 5. It liked the 5-day look back. I was just going to narrow it down for us a little bit. And let's scan that again. Let's just see. There it goes. It likes the 5-day, not the 3-day. It should be fine on your actual, I'm in a Paper Money demo account here, but it should be fine with the other stuff that you're looking at. But here are some examples of what this looks like. Okay. As we take a look at the pullback and the hold occurring here above that period of time, and we can go through and look at several of these, but like say, for example, UAL is in here. That's United Airlines. I want to take a look at United Airlines and see what we've got. Okay, is it setting up for a hold right now? Did it spot this in the market for us? There's your pullback. Yes, right here. And notice something interesting. You're kind of getting towards those prior highs, which is what we tend to get. The staircase sort of a setup, right? Look at this, that range right there. There is your bounce. What did we just look at in the market? We looked at a futures contract, just the chart, but we looked at oil. That's a huge input cost to these. And if the oil keeps dipping, well, what did we see here? We're breaking above a huge resistance level. All else equal, that's a key positive too. Now there are earnings coming up, but oil has dipped, and that could be interesting too. But there you have it. Now you'll notice something else about this. Are we still by the way, I have to state this. The closing price according to ThinkScript, it says right now we're closing above. But reality is we've got another 40 minutes to go. Now, it appears that we're going to get a hold, but we don't know for sure until the day is up. So I can't officially tell you it's a hold right now. But we could say there's maybe an expectation that we're going to get a hold because time's running out on the day. But if we were to run this at 9 in the morning, it still would have showed a hold, right? With all that time left in the day, because we are currently closing above. If you want to get a real hold, a true hold read, run it after the market closes, I guess is the best way to say it. It does look like a cup and handle. By the way, I've got a few ThinkScripts that I wanted to trade today too, because we're seeing some of the ThinkScripts that we have done recently. They are showing some signals too. So park that in your mind as well. But yeah, there is a little bit of a, I can even see like a cup and handle over here. By the way, looking at holds, look right here with me. See that? What's that? There's a hold right there. And when did the stock begin to run? When it really started to run. How about right there? After the hold. Did we have one down here? We did. And you know what? I don't think we had a close below, a close above the high to low day through there. And that's 10 days. Where did it start to move? Ah, right there. There's your close above the hold. That's what I keep saying. Close above the high of the low day. Sorry, I should have put this in every time, but I get so used to saying it over the last several years that I want to highlight it. Close above the high of the low day. There's your high of the low day. You didn't get that. You got it. Bam. Okay, that's what we're talking about here. Now, watch this. How does it run with a potential exit strategy associated with it? This is what I wanted to highlight. Great, now it's erased. All right, so let's see. Hold, there it is. Hold MA trend. Now you get to visually see it on the chart and test it out. So then you can take this data, this 20 period in the inputs, and park that over into your scan if you see something coming up more frequently that you want to use and spot out. But here is this now. Okay, I put a C in when you're getting the hold. It doesn't show it yet. Okay, we're not closed officially yet, but this is the hold, and this right here lets you see how a 20 period moving average has been doing. I got to tell you, it's been doing so-so. It hasn't been doing great. It's been giving back a lot. Could we tighten this up given the structure of the current trend if in fact we get a breakout here? So we use the scan and then we can kind of adjust it to see based on after the hold, which is exactly when this line begins, is price holding above it? Are we able to capture a big portion of that move, which is what we're really shooting for? Watch this. If I change that to it's a 20, if I go to a 10, let's just see how well it does capturing some of these setups here. Let's do this. So here's a 10 right there. Still, it's a 5-day look back period. In other words, there's got to be a pullback of 5 bars. That's built into the code to get the hold in the first place. So that kind of matches what we were looking at on the scan. But now I'm going to use a 10-day moving average. Okay, what do you see on this one? Okay, this one a little better. I think even a 5-day moving average would have been better here because remember, this is a strategy. Look over here on how to exit. Potentially, this is a way traders can utilize a moving average to exit the stock in case price trades below the moving average. Now, with this hold right here, and you got, let's just say you got in, it would have kept you in, and the line stays on until you cross below it. Okay. So this whole thing, it would have got you out. If you're just using this, that's when you broke below the 10 moving average. This is a cool way to kind of highlight this. Now, these just flat out, they were holds, but they broke down. There is no line showing up here. You had one here for like a day, and then what happened? You broke below the line right there. Sign of weakness. So you could wait for the next day too, but look at this. Better, right? Than the 20? Better. Hold in on the hold. Where is the exit? Right there. You're capturing much more of the move than you were down here on the 20. We good on that? Does that make sense? By the way, I should start sharing these, right? Okay, let's do it. Yeah, remember, think scripts aren't guaranteed for timeliness or accuracy, but we'll throw these in here so you guys have them. This is the actual, I'll put this one, this is for the chart. And remember, I want you guys to use this as a way to adjust and to see what does work on any chart after the hold, the pullback. And in other words, what we're really saying here is we're really just talking about a flag pattern. That's all we're really saying. We're saying a flag pattern, or it could be another pattern, but you're looking at a trend coming up, whatever it is, a pennant pattern, a triangle pattern, whatever it is. If I get my hold over here, how does it tend to run with a given moving average using lines down here that we're looking at for a potential exit, right? That's kind of like trend trading. Let me know if you guys are clear on that. And then we'll go from there. Let me know. Okay, it should be clear as mud. All right, let's go up top. But that's what we're talking about here on this one. And now you have it. Now, by the way, anybody that is viewing this on the recorded session, I'll have this down in the description box down below under the YouTube video if you're viewing the archive session. But I just flipped this to a 5. Really cool. But look at this. Let's go over here. I mean, we've just got, look, there's another airline. You got these in here. Dell's in here? Really? Dell is going, well, it tells me Dell just had a hold in the last little bit, and there it is. And notice it's starting again, but this is a longer pullback. That was a giant move. Now, this one here would have worked out pretty well. I mean, in hindsight, yes. But if you were tracking it, do you see the flag right there? Where does that MA start? Right at the hold, right there. These big moves up, I will just state this. They can take some real time to consolidate here. They can. You get a big jump up like this, that's a big price move. Sometimes it goes sideways for a little bit. So just be a little bit cautious on that, but it pulled it up regardless. Let's just hit another one here. I still have to share that scan as well. What do we have? Ooh, AMAT. So some of the semiconductor PG's in there too. Let's look at two very completely different ones. AMAT, and I'm going to go back into the there's your hold, right? There's your hold right there. Okay, I think after this bar we should be getting it. Oh, you know what's going on? So the other thing I wanted to highlight here, and this is in the script I mentioned, but you have to be, in order for that line to show up, you've got to be above the moving average that you're listing here. I don't think we're above the 10, and that's the problem. Look right here with me. If I flip this into a 20, excuse me, a 10, where is the 10-period moving average? We're below it. That's why it's not firing this off. You have to be above the moving average as well. You see what I mean? You have to be above it. That's where you're getting these signals. S- Signal, you got to be getting strength. So that's another key point that I threw in here. I think I just briefly hit that at the beginning, but I really need to dive into that. You have to be above that moving average. And why is that important? Because the trend needs to be up. The trend, you're looking at the upward trend. Now, I threw this into a 10. It's going to show up if I did the 20, but that's the 10. The other one too, PG. There we go. Not showing up on the chart. Ooh, that one was a fake out, but it did end. Remember, what is our look back period? Always put it in context. It was 5 days. Is it being legit in what it wants us in what we asked it to do? It is giving us a legitimate indication. Okay? Because we had our Cahold where? Easy to see. The green C right there. You can't miss it. 1, 2, 3, 4. We had it. Now, do you want to just throw this whole thing away? Well, it's still interesting. Look at PG. It's sort of like shorter term cup and handle getting going, but I would say, I mean, a lot of traders I think would say if you can't break above resistance, that's a problem, right? But maybe if it breaks above resistance. So tapping into more ThinkScript, well, just Thinkorswim tools, go like this, right click here, create alert, and make sure that this gets sent to us. Just break out via text message, breakout question. I would say question mark because you never know. Go down here to notify. Make sure, folks, that you got the mobile checked. That kept me in the dark for a little bit years ago. Make sure that mobile's checked. There you go. There's your line up top too under setup. Go to setup, application settings, go to notifications. You can add an email address in there. I like text messages because I tend to have my phone with me more than I have well, you can still have it text or email you and show up on your phone. That's true. All right. So there is that. A quick note too while we're on it, because we did just bring up a that the excuse me, the alerts. If I could get that out of my mouth. All right. The alerts. Wanted to note, alerts aren't guaranteed to be delivered at any specific speed or time frame and should not be used as a replacement for being actively aware of your positions. Now, I bring that up. Have I had any issues during the day with alerts not showing up? I haven't, but we just wanted to stay. Yeah, I mean, obviously keeping eyes on what's happening is very, very important too. But what a cool way, right? To set this up for potential indication for a move over a range. Now, let me share this script so you have it. But these are actually pretty detailed in terms of a number of different layers in there to try to avoid the false signals is one of the key components that we've got on both of these, actually, the charts as well as the scan. Um, a lot built into it, and I've made notes along that script so you can see it. I don't have a ton of time to go through them, but let me just do this right now. Let me share this with you, but they are all there and I can address those in future classes. In fact, I've been addressing some of that script in swing trading to a degree. But here is the actual scan right here. There you have it. So you can pull these up, and I'm just saying it's trying to find those areas in the market where we're getting something like this, the move up, the pullback, the hold right here, and we're still trading, um, breaking through that level. Let me just do one thing here. I want to make sure I've got one thing here. Let's just do this here. Volume spikes. Yeah, that's the one. Okay, cool. Yep. Okay, we're good. The big thing though is yeah, getting us to hold above that hold and watching that. All right. Well, that's their last one, DG. I just want to see DG, what it's doing here on the chart. In fact, I'm going to put this back to a 20 period so it just makes more sense with the scan. Remember, these should be in line if you're looking at it that way. Here is your 20 right there. There you go. This one ran really well with the 20. I'm going to knock out the 10 so you can see it a little bit better. So look at that. So here you go. There's your hold after you double bottom breakout right there. The 20 period moving average, once it gets going, is interesting. Now it just stopped here. That was a big move over there. You can kind of change this a little bit though around. All right, so those two work together in terms of helping you with potentially helping you with trend management. That's the idea here. That's the idea on that. Now we have a little bit of time left, and what I wanted to highlight here for you are just some of the think scripts that we've done in the past in terms of the TTM squeeze reloaded. In other words, we have a compression zone. I bring this up because I think it's timely in terms of where the market is at. There's your 20 period moving average starting way down here. Let me just, I'm just going to take this off for now and highlight an interesting element that I think, we might be able to tap into from a prior script that we've had as well. And if we take this off, the RSI, I'm just going to put in the TTM squeeze right there. Now, within that squeeze, I'll explain that. Oh, I had one there. Okay. I'll explain it here in just a second. I'm going to take out the histogram and just leave in the comparison here in terms of the compression. Okay. When we are in this red zone here, the Bollinger Band is trading within the Keltner channel. It tells us very likely an extreme low level of volatility, a tight range. You'll notice what happened. We broke down. It doesn't mean we're going to break up or break down. It just means we might start to move. We just got that happening over here. And what is today? Today is the very first day of a change right there. Bollinger Band shooting outside the Keltner channel now. Think about Bollinger Bands in terms of a read on sensitivity of volatility in terms of the range of a stock moving. Isn't it interesting that's happening at the exact same time that we're testing that upper channel line? Isn't that fascinating? Within the historical summer rally range here, we don't know if that'll happen, but it is within there within a longer term triangle too. What I'm getting at is if we use the S&P 500 as a guide for our ThinkScript indications, there are how many companies within here? Yeah, roughly 500. Not exactly always 500, but it's very close. It's a lot of companies. So utilizing this, what companies, and we talked about this, and I'll show you where this is at in just a second, but what companies are breaking outside of a volatility range on the chart? Let's look at a few. Okay. Here is one that pulled up on that script. There you go. MasterCard. What do you see on MasterCard that might give you an indication here of the possibility of a turnaround, or maybe something you could look at? This might very well show up as a hold, but maybe you want to have eyes on it. It was brought up earlier. Who had it? Who had it? Talking about cup and handle. You might see it here. Maybe they've already mentioned it. Cup and handle. Oh, you're welcome, Jenny. Absolutely. Glad it's been helpful. That's the idea, anyways. Yeah. There's your cup and handle. This found it. That script we did previously. Remember, it lines up with the S&P 500, what it's doing right now. What is the S&P? I mean, the S&P is in a sort of coiling with that triangle, potential triangle pattern here, lower and lower volatility. Now we're starting to see some of these companies already move outside of that volatility range. MA, MasterCard, that is one of those. It's right there. So take a look at that. Folks, if you're getting value out of these discussions, do me a favor, smash that like button. It just lets us know that you are finding value out of this. That's the whole idea. You got to find value, though, before you smash that like button for sure. Also encourage you, too. I've got about 3 more of these to hit to take a look at here, but these could be very interesting. In fact, what I'll do, I am going to do a paper trade on this one, but only a portion until we get more of a confirmation, like a hold or this maybe this possibility of a flag pattern starting to really, unfold and go higher here. Okay, so I'll point that out to you in just a second. Before I do that, though, love to have you follow us on our Trader Talks channel. If you're not already following us, consider doing that. We got 205,000 subscribers, and you do get access to these great lists over here. Playlists, for example, you can actually also come in here and type in squeeze to find that TTM squeeze. Now, Cameron's done some of these, and so has Ken. This is the one I did right here. I believe that was a little more than a little more than last year. But there you go. These are the ones I'm doing here are actual scans that you would find. You can find good instruction though from the other coaches. There's no doubt about it. Let me just post this link in so you've got it down below. This is a list all of these, of all of these right here. Copy the link. This is the full playlist. Well, this is our one from last week, the cluster zones, and we had some other ones in there too. I'll just paste this in though for you so you've got this into the chat. All right, done. So um, that is the full playlist, and that's how you find it. Playlist right there, boom. Okay, so there's one, and let's do this. So it's an expensive stock, and there's some indications in here that we might be seeing a turnaround in terms of a price pattern. But a trader might say, you know what, I'm only willing to go maybe like 20, 25 shares. It's an expensive stock. Now, if you start to get the hold, maybe we can add more. But until that happens, let's go to our trade tab here, right click. We could do actually, let's just do the buy here for now. I can adjust the exits and whatnot later, but maybe a 20, well, you could set the exit around a 20 period stop, or excuse me, a 20 period moving average, like we were showing on our charts. Remember, stops, stop orders aren't guaranteed for timeliness or accuracy. Excuse me, they are. I'm sorry, I've got that confused. Did I read this? My whole thing is I just want to make sure I'm hitting this so we can get this posted on time. I don't see a note in here for my stop orders as I'm thinking about it. Just a second, folks, because I want to make sure we get that read in here. Let me pull this down one second. Many of you already know this, but I just want to make sure I'm saying this correctly. Since I'm placing a trade, got to get these posted. There's no guarantee that the execution of a stop order will be at or near the stop price. Okay. All right. So anyhow, um, I'll put a stop in here. We can have targets as well, but I'm gonna go to a good tail cancel order. Let's lock this down and put this into a 20, 20 shares, for example. And we'll set this visually on the chart. Let me just put it down a little bit. There we go. I'm 19. Always keep an eye on your dialog box, as you can see right here. Yeah, even 20 shares has a buying power effect of about 2,600 as it stands right now. We'll send that on through. There's the fill and the stop order, perhaps below the entry point, keeping it excuse me, below the low of the entry bar right there. So a few others out there that have come out of a low volatility range according to the TTM squeeze right here. Sorry, INTC, Intel. Look at that. Look how many days we were. Oh, look at this. This is beautiful. Look how many days we were sideways here. Boom. Broke out of the range. Look over here. Consolidation. Where are we now? We are moving. So will semiconductors start to go? Technically, that is a hold right there today. I mean, if it stands, right? 15 more minutes, if it stands, you know, if so, this could be a giant flag pattern, right? They could go up. I mean, that's something that a trader could be looking for right there. But this will help to spot it. So again, that's in the playlist and those codes are in there. Let me just hit a couple more while we're at it. But you'll notice many of these, it basically is sort of a cup and handle sort of finder. There you are. Just look at each of these as we pop off of them, right? There's VRSK and the last one, VRTS, right there. Just coming out of it. Wow. Several days. Very, very rare to see that, uh, occurring, but yet kind of a rounded bottom over here. Interesting. Okay. Sorry, I lied. One more. Last one. OMC. All right, folks, we'll take this information. Again, we like to use ThinkScript according to what's happening in the market, finding those scripts that we've talked about in the past where volatility shrinks, but maybe just barely starting to expand right now to take a look and see what's out there, but also tapping into some of the flag patterns that we looked at today, right? Those cajoles and testing those against what you're seeing on the chart. So we went through that today. Hopefully you found this informative, useful. If so, smash that like button. Thank you, Kevin, so much for your help. It was great to see you all today. And I look forward to future discussions. As always, a very fun class to sort of try to be creative with, find new things, but I'm always open. And I build a lot of stuff just based upon your topic requests, things along those lines. But yeah, definitely let me know in the chat. You guys have a fantastic rest of the day. See you next time.